Today we'll talk about a stock that has received a lot of media attention lately, and that is Nordic American Tanker, or NET. This stock not even a month ago was trading at around $3.5 per share. The stock went up to $5 per share within the next 2 weeks because of the drastic decrease in oil demand. The stock got a lot of media attention once the CEO of Nordic Tanker came on CNBC with Jim Cramer saying that they are making a lot of money. The retail investors at that point jumped in as well, started buying shares of NET, and the price kept going up, and it gained a lot of momentum up to $9 per share at some point for a short period of time. However, the stock lost momentum and now it's going back to $5 levels. Is Nordic American Tanker stock still a buy? What did its CEO say on CNBC with Jim Cramer? What are its fundamentals? Is the company profitable at all? How many vessels does it currently have and are they profitable? Is it a good short-term investment or a long-term investment? Will this stock go back to $10, $15 where it was, let's say, back in 2004 or 2016 during oil crisis? To find out all the answers about this, let's just get into a deep analysis. On April 27, the CEO and chairman of Nordic American Tanker had an interview with Mad Money host Jim Cramer. He told Jim that NET was making a lot of money, and he kept emphasizing a lot of money. Obviously, this was good news for the future of NET, which brought in, at this point, a lot of retail investors. This interview with Jim Cramer on CNBC increased a lot of volatility in the stock. The stock price gained a lot of momentum the next day, and it reached $9 per share. As soon as the stock lost its momentum and started going down, a lot of retail investors cashed out, took in their profits, which made the stock go back to around $6 per share. Now the stock is going slowly down to $5 per share. In this video, we will argue that this is a great opportunity for short-term investors to add to their positions. Keep in mind, their earnings is approaching in about 2 weeks from now. Alright, let's talk about their ships. Nordic American Tanker right now operates in the Suezmax market with 23 ships available on the spot market. In Q4 2019, the Suezmax spot market increased by around 77% compared to Q4 of 2018. So in 2018, the Suezmax spot market was at around 17,300 per day, whereas in Q4 of 2019, it was $30,600 per day. So to put all of this into perspective, these tankers nowadays in 2020 are averaging at around $62,600 per day, and for the week of April 24th, these tankers are averaging at around $112,800 per day. So these earnings as of the week of April 24th were 6.25 times the Q4 of 2018 report, and it was 3.7 times of their Q4 2019. Alright, these two graphs clearly show how high the tanker rates have gone recently. The graph to your left shows that 2020 has reached all-time highs already compared to any of the years in the last 15 years or 2 decades. The graph to your right shows our monthly rates in thousands of dollars per day. As we can see from the graph, the blue line represents 2018, the red line represents 2019, and the dark blue line represents 2020. We can see a huge spike in monthly rates in April, and it went up to 120. Now it's kind of leveling off. However, if oil drops into negative rates again, the spreads between the spot price and forward contracts could push daily spot rates to crazy high numbers again. Tankers will definitely benefit from these high rates this year. NET is definitely taking advantage of these increased spot rates, which will probably lead to really great earnings. Net could see an average daily rate of 80,000 per day based on the current trades and based on the unsolved oil issues yet. These rates could possibly mean that Net can earn in one quarter now as more than what they earned in all of 2019. The best part about the increased rate is that Net's costs did not increase and they stay steady at around $8,000 per day per ship, which of course allows extra money earned to be directly part of the bottom line. For the sake of analyzing and comparing oil prices, let's go back to 2014 oil prices, when oil prices were really low. They plummeted during that time. So right after our Great Recession in 2008, our economy started slowly recovering. So there was a high demand for oil, which led to higher oil prices. So between 2009 and 2014, oil prices were fluctuating between $100 and $125 per barrel. In 2014, oil prices started plummeting, and the main reason was there was a strong dollar during that time. So a strong dollar is very costly for other countries because oil is traded in US dollars. During that time, China's economy also kind of slowed down compared to the first decade, and on top of that, Saudi Arabia also was experiencing some production issues. As this graph is showing, the West Texas Intermediate index fell from $110 per barrel to around $50 per barrel by the end of 2015, and then it fell down to around $30 per barrel by the end of 2015. Oil prices and oil tanker prices tend to be inversely related. During this time, while the oil price was plummeting by the end of 2014 and 2015, oil tanker prices were going up. As it can be seen from this graph, Nordic American Tanker stock price started going up from around $8 by the end of 2015 to around $15.5 per share at around 2016. And after that, once the oil issues got resolved, of course there was no demand for oil tankers, and then the price of Nordic American tankers started plummeting. If we closely look at the income statement for Nordic American Tanker from 2012 to 2016, we could clearly see that the company experienced a net loss in all of the years except 2015, when their bottom line was around $115 million in profits. Of course, the reason their bottom line, their net income, was really good during 2015 came due to the fact that oil tankers were in high demand during that time due to the low demand in oil during 2014 and 2015. As we said, that's when the oil prices actually dropped. Now let's briefly analyze their financial situation, financial position for the last 3 years at least. As it can be seen from the income statement, their revenue has slightly increased in 2019 compared to that of 2018 and 2017. And also there is some good news for net income, or net loss in this case. So their net loss has been decreasing drastically in 2019 compared to that of 2018 and 2017. If we look at their balance sheet, we can see that their cash and cash equivalents have been kind of the same in 2019 and 2018, but they've been lower than 2017. If we look at their current liabilities, the debt that they have to pay this year, we can see that that has drastically increased compared to that of 2017 and 2018. So that's not really a good sign there. Looking at the cash flow statement, we can see that cash flow from operating activities has been increasing and has been in a good position compared to that of 2018 and 2017. free cash flow as well has been in a really good standing compared to 2017 and 2018. Right now they have around 50 million in free cash flow, but during 2018 and 2017 their cash flow was negative 21 million and negative 5.8 million respectively. As I just mentioned a couple of minutes ago, that oil prices and oil tanker prices tend to be inversely related. When the news came out that oil problem was not as bad as we expected, the West Texas Intermediate price went up by 36% from their lowest point, causing Nordic American Tanker stock to fall much lower as investors started having concerns that the oil glut may be reducing. This graph shows the relationship of oil, world production, and world consumption. We can see that in Q1 of 2020, oil consumption started to drastically fall, and we expect that by the mid of Q2, the oil prices to be even at lower levels before the analysts forecast that the world consumption is going to pick up again, which should be at some point around Q4 according to the estimates. Between the pump in oil based on the news that things are not as bad as they seem and what the net CEO said, and based on the analysis that we did in this video, we believe that the net stock price at this point might be a good entry point for a short-term investments, because we believe that net will drastically increase their earnings in Q2 and Q3 of this year at least. So their annual return, annual bottom line for 2020 should look really good. The oil problem is here to stay at least for another 6 to 9 months. Thank you for watching and listening to this video. This is not a financial advice channel. This is not a recommendation for you to invest in this specific stock. This video has been done mainly for us to share our thoughts and research on this specific topic. Please, if you have any suggestions, any feedback, leave a comment down there and we would gladly reply to that. Please like and subscribe to the channel for future videos. Thank you.